Hello and welcome to today's video. Now in today's video we're going to cover four things. The first is the news which is going to impact the market this week and also in tomorrow's trading session. Secondly, we're going to cover Mahindra and Mahindra, as I believe the stock is going to be offering option traders a good opportunity and it will be hurting equity buyers. After that we're going to cover Sun TV, and lastly we're going to cover the Nifty Midcap, since it has its expiry tomorrow, and I believe option buyers and option sellers will have an opportunity in this expiry, but it will be a bit tight for one of the lot. Now coming to the news front, now on the local news front, I expect the markets to react tomorrow morning first to the Q1 GDP numbers, as they're lower than basically last time, and even though the GDP numbers were expected to be lower, but them coming at 6.7%. Now basically it was that time a rumor, now it's come reality, so the markets will react to that. However, I think the factor which the markets will react to more is the auto sales data. This is the auto sales companies will be releasing the August sales data today and tomorrow, and so far what data I've seen is negative. As I've seen, Maruti Suzuki has released its numbers and they've had a drop of roughly 4% in sales from the previous time, and I expect that trend to continue even in Mahindra Mahindra, which are coming today. This is, as anyone who's following the news and alone on the auto sector knows, that most of the auto companies in India right now are sitting with huge amounts of dead stock. There is supply, but there is simply no demand for it at that level. So that will affect the auto sector plus the market as a whole, I believe. And that's it on the local news front. On the international news front, last week was a very light data week, but this week we have two very important data coming out in the international news. One is just unemployment data, and second is the non-farm payrolls. These two, there are many other data points coming out, but I've only mentioned these two, as these two is what the Fed will be taking a look at in the coming week, so it will affect the coming trading sessions. This is, as of right now, 70% of people believe that there will be a 25 basis points rate cut, and 30% believe it will be a 50 basis points rate cut. And for the whole year, everyone is expecting a max of 100 basis points. So now this two latest numbers is what will determine whether the 25 and 50 play out, because everyone knows the rate cut is coming, but whether it will play out or not. And another news, in fact, which is going to be important, is the BOC is going to be having the rate decision this week, and we will have to see whether they'll be the first ones to take that leap and do that rate cut earlier than even the Fed does it. So that's on the news front. Now coming to Mahindra and Mahindra. We see the stock. The stock has been range bound for quite some time. If you look at it, it's been basically traveling within this range for quite some time, from basically May of this year. Now, why have I chosen to cover it now? Now, number one, the auto sales data is bad. 100% is going to be a lower number. Yes, the new rocks which they released may try to do some boosting, but I expect largely either flat number or a negative number for Mahindra too. So, unless it's able to break the 2860 resistance, I believe we're going to be breaking the support, most likely at 2740. If we do not do it tomorrow, we'll do it in one of the coming trading sessions. This is, I believe, any up move will simply be a dead cat bounce. Why I say that is there is simply too much of a resistance between 2927 and 2980. I say that as if we look at, let's say, in terms of simple price action, remove the levels which I have put. Now, this candle which is the very important one. This is as it managed to wipe out all the bullishness from the stock, and it's what's going to determine whether we go up or whether we go down. Second, the trend catch indicator, yes, it's above zero, which is a positive sign, but it's flat above zero. It's not able to have a good rise. So that shows that any move, even if we were to break this resistance zone, we're just going to go up here and then fail again and come down. And within this price range, there is no equity trader is going to make any money. Day traders can make something, but not significant enough to. So this is more of an option seller's trade according to me. So again, to reiterate, I believe any up move will end up going and getting smashed at this resistance zone and coming back down. On the other hand, if the auto sales data comes out negative, then I expect it to first go and hit the volume support here, which is 2695. Now, why I've highlighted that support is it is of this very important price bar, and if it breaks the support at 2965, then the quant levels will come in and we can expect a fall to 2560, and if it breaks that, then 2400. However, 2560 is a very strong support. As we also see here, there was a bullish high volume price bar, and also before that there was a price rejection on the downside. So this is a very important support, but if you break that, then 2400 and even going down further down will occur. So right now I believe Mahindra Mahindra should not be touched by equity traders. F&O traders can trade it. They can basically do what I've already done. I'm holding C cells above this range. So they can enter C cells above this range, and if it manages to fall to the volume support of 2695 and breaks it, then C cells above the volume support will be small profits but easy money, I would say. Now the next stock we're taking a look at is Sun TV. Now Sun TV is one I had covered in my previous YouTube videos, and I also covered it in an investing article. This is at this point is when I had recommended going long, and a lot who went long ended up making money as it had gone up. Now after that, Sun TV has not had a good time, and if we look at it in terms of simple price action, ignore the levels for now, we see that Sun TV is not able to basically break above this resistance zone. So I believe any up move right now will have to go and first win over the resistance zone between 850 and 865. This is a quant resistance level. So it has one simple candle resistance here, then a quant resistance level here. So again, as the same as basically Mahindra Mahindra, I don't think longs have much to go because the risk reward ratio is pretty useless. And any up move towards here, unless even if you get a perfect entry and a perfect exit, you will still make very little money on your trade. I don't hold any Sun TV position in any sort of form. So I believe if Sun TV basically is to break the low of this candle, then we'll be going towards the support at 790, which is very key. A break of 790 will take us until 750. 770 will be a stopover, but most likely a break of 790 takes to 750. So for Sun TV also, I believe equity traders should avoid, as risk reward on the upside is very poor, and they don't want to be buying here and then it going to 750, as that will give them a decent loss in that thing. So I believe Sun TV even is another stock that right now it shouldn't be touched. It was a very good long trade we did earlier, but now it's not a trading opportunity. Now coming to the Nifty Midcap. I have highlighted this resistance level in blue, as it's the same resistance which I had shared last Monday at the video as the topmost, and we can see that we basically have not been able to break it. We went towards it and we still have not been able to come up above the 13,250 resistance zone. So that shows that basically the whole week this resistance zone stayed relevant, as all up moves towards it could not make a bigger move above that. Now coming to today's expiry trading session, Monday's expiry trading session, I believe that there is not much room on the upside left for the Midcap Nifty, and any up move to the upside will be more of scalp trades. Number one, GDP data is coming out, which is not good. Then we have reached a major hurdle, because even if we were to break 13,250, then 13,320 is only likely target I see it going to, and then it will have to come back down. So I believe usually in the past 1 to 2 weeks on the option trading plan I've been sharing on my own, I've always been saying that to sell puts first and then calls in the latter part of the day. Here I believe the opposite is going to be. It will be better to sell calls first at open and then sell puts later. Yes, the calls might face some pressure, so you'll have to give them a bit of a flex in terms of the stop to allow them to move within a certain range and then end up moving. I believe option buyers tomorrow we'll get an opportunity to basically first at open when it goes, it will a small short to 13,150, and if it by chance breaks that, then it's a big short to 13,050. But I expect it to go towards this support, then option buyers will get a small up move to do towards this. That's why I said scalps, and then another short. So I expect option buyers to have a good day, because it will be a two-way move, but it won't be big juicy moves, it will be small moves. We'll only get a big juicy move if we break 13,150 support. Now on the option selling front, at open I'll be selling calls of above 13,250 if I want to play aggressive, but it will all depend on how we open. If I want to play cautious, then I'll go and sell 13,320 and above. So that's how the Midcap Nifty I'll play on the call sell, but I'll sell earlier. On the put sell front, I'll wait for the drop to come. If I see even if we are holding this zone, then I would prefer to sell puts below 13,050, as I think that this will be, even for aggressive player, will be too aggressive. So on the put sells 13,050 and below. If you're an aggressive player, if you're cautious, then basically 13k and below, 12,980 and below. So that's my trading plan for Midcap Nifty. Expiry again, option sellers expect dual A moves, not big. Until it's between 13,150 and 13,250, you're not going to get big moves. You're going to get small scalp here, small scalp there. So you'll have to be very good at your entry, very good at your exits, and the options timing and everything. But if it breaks 13,150, then you'll get a big move to 13,050 and probably even 12,980. Option sellers, aggressive to 13,250 and above, less aggressive, 13,320. Option sellers on the put side, 13,050 and below if aggressive, 12,980 and below if you're not that aggressive. So that's my trading plan for the Midcap Nifty expiry. And if you liked it, the video overall, then do hit the like button and also subscribe to the channel and hit the notification bell. Any suggestions or any stocks you want covered, drop them in the comment section below or WhatsApp them to the number shown in the description box below. Thank you.